Well, we are, of course, nearing the end of the decade. 2019 was a big year for stocks, and this decade brought the longest bull run in history. Scott Gamm on the floor of the New York Stock Exchange to help us look back. Scott?
Well, Julie, it was just about a decade ago, early January of 2010, when the Dow Jones Industrial Average was trading at 10,500, give or take. Fast forward a decade later, and we are nearing 29,000 on the Dow. That's a 175% increase over those 10 years. Now, of course, a decade ago, in 2010, we were still reeling from the financial crisis of 2008 and 2009. But it's not just stocks that have had a striking move over the past decade. Take a look at bonds as well. The 10-year Treasury yield in early 2010 was trading at about 3.8%. A decade later, it's about 2 full percentage points below that level at about 1.9%, although it was just 13 months ago when the 10-year yield was over 3%. So certainly a lot of volatility in bonds over the past decade. And then finally, oil prices. A decade ago, early January of 2010, West Texas Intermediate, that's the U.S. benchmark for crude, was trading at about $79 a barrel. A decade later, it can barely even stay above $60 a barrel. Of course, the U.S. shale revolution, so to speak, has really come to light over the past decade, with the U.S. flooding the scene with oil production, which of course has pushed down prices for the benefit of consumers. Julie, Adam.
Scott, thank you. We want to talk more about the wild decade for these markets, and let's introduce this hour's panel. Bruderman Chief Market Strategist Oliver Pursche and Lending Tree Chief Economist Tendayi Kapfidze. Good to have both of you here. Is there any one thing that you think should stand out in the minds of investors as we look backward to help them figure out the next move going forward?
Yeah, it's very easy. Don't fight the Fed. This was a lot of money printing over the past decade, easy monetary policy. But also combined with that, because they tried that in Europe as well and didn't go as well, a lot of fiscal stimulus as well. So don't fight the Fed, don't fight Congress when they're spending money. Very simple.
What do you think?
I mean, that's spot on. And I think that when you look forward, though, you have to ask the question, when is the money being taken away, right? When are they taking away the punch bowl? There's been some emergency liquidity provisions that were put in over the last few months by the Fed because of the repo rate issues that we experienced back in September, October, right? That is set to go away in April. So you want to pay attention to that and see what type of words come out of the Fed, what kind of actions come out of the Fed to make sure that the punch bowl doesn't get pulled away too aggressively. Because when you think back over the last few years, the Fed has done a lot of things very well and were right, but they also had some pretty big missteps, mainly a couple of years ago when they raised rates way too fast. Mm-hmm. So that's the thing to look out for.
And what about on the fiscal stimulus front? Because obviously we're going into an election year, and it doesn't look like, at least in the very short term, that there's going to be any fiscal stimulus. Maybe out to 2021, there'll be some talk.
Yeah, I think that's okay. At the end of the day, the U.S. economy is a consumer-driven economy. You are seeing some modest wage growth starting to pop up, and so that's a big positive. The consumer, while leveraged, is not over-leveraged. And now that we're getting some clarity on trade, there's a possibility of businesses doing more investment, and that could be very helpful. I think if you're looking at 2020 as a whole, the sky's pretty clear, at least as far as it can be.
Okay, I get don't fight the Fed, but when I hear Oliver say, they're eventually going to have to pull that punch bowl away, I immediately think of Japan, because the punch bowl didn't get pulled away. And we are, in one regard, we're going to be talking about this later on, our birth rate and our population growth rate are at levels not seen since almost 100 years ago. They're essentially flat. How are we not Japan? Why would they pull the punch bowl away?
Yeah, so I think that's the big question, right? And a challenge for the Fed now is, can they tolerate a decline in the stock market, for example? Are they open to that? Because it seems every time the stock market wobbles, they kind of get spooked and they act. And then on the demographics, we have had a decline in the growth rate, but it's still positive, whereas, in a place like Japan, it's negative. So, as long as we stay positive on demographic growth rate, maybe get a little bit more immigration, maybe after this administration, then, this.
And Dai's advice in 2020, make some babies.
The issue, though, the issue on demographics that the U.S. Is facing is a shrinking working population, mm-hmm. right? The amount of adults that are able and willing to work, the 18 to 65, it continues to shrink. So in that sense, it's negative population growth. And that means you're going to continue to see very low unemployment numbers. but little wage growth. And that's problematic because you need productivity then to be the key driver, and that's unlikely to happen in the next 20 years as the way it did in the past 20 years.
It also seems like the next decade is by necessity going to have to bring more of the retraining that we've been talking a lot about, but not necessarily seeing as much of. And maybe also, people, we've talked about this trend, people have been very reluctant to move to where the jobs are in many cases, right? Or they've been reluctant to move, period.
They've gotten burnt the last couple of times they did it, right? The big shale boom when people moved to North Dakota, and then all of a sudden that goes away because prices collapse, and you're sitting in North Dakota doing nothing.
Yeah.
I mean, there's nothing, if there's no job, you've got a problem. So that explains the reluctancy. Again, I think overall on balance, 2020 is a pretty positive year for everything, for the economy, for markets. But there's certainly headwinds to watch out for.
Yeah.
I think the big risk for 2020 is still on the business side. So this year we had a strong consumer year. Business spending and investment was kind of weak. I think with the election coming up, there's still uncertainty, in corporate boardrooms and corporate investment teams as to where they put their money and what kind of legal or regulatory environment they will face after 2020.